It's my pleasure to introduce Willem. He's the founder and, of course, the head of the Commodity Discovery Fund. Willem, wonderful. Good morning.
Wow, so many people. I gave a presentation in Frankfurt a few years ago, and we had 5 people in the room. 4 were presenters. And that was early 2016, so that was the bottom of the market. So is this the top? I don't think so. I prepared 250 slides for today. I will give 3 talks. You can leave if it's enough. I'll do a short introduction. I have 40 slides now. I'll do the keynote later this afternoon on the big reset. Lots of developments there. And I'll concentrate more on battery metals during our annual meeting. But I'm very happy to see many familiar faces, investors and companies presenting here. It's a day to celebrate the discoveries. It's a day also to honor the geologists who've been responsible for these wonderful discoveries. You will learn who's the winner of the Discovery Award later today. First, a disclaimer. I'm happy to tell you, our regulator, they informed us, we always were in class 7, high risk, high reward. And now we're only 6. We became more defensive, so. Well, actually, this whole journey into discovery investing started for me when I was working as a market commentator for RTL Z, Dutch CNBC. They just canceled me, by the way, because of my contrarian views. But and I was a private investor, so working on the stock exchange at day. During the night, I was a discovery investor. I learned about a few very amazing discoveries. I was a private investor. I didn't know Canada. I didn't know anything about geology. But I thought, let's make myself a specialist, and I invented the Middelkoop Discovery Alert Service in 2005. And I sent out my best tips for $150. And you can see it here. Remember that one, Aurelian Resources? So everybody thought I was a genius, and then I had a friend, and he said, you're crazy. You sell your best tips for $150. You should build a fund. So that's what we did. And we started Commodity Discovery Fund. It's about the art of discovery investing. I've shown this slide many times. If you're lucky enough, you can make a lot of money, but you can also lose a lot of money. In the downturns, this is highly speculative. This was Aurelian Resources. There was some beginner's luck, bought 10,000 shares for 30 cents. And that was 6 weeks before the Fruta del Norte discovery. And it ran to $43 within 1.5 years. So that was an amazing one. It was one of the first investments in our fund as well. Although the discovery was in 2006, the company was eventually sold at the end of 2008. We believe in luck. And the harder we try, the more lucky we are. And I also believe you should open as many doors to luck as possible. And that's why we concentrate. It's our philosophy. It's our strategy. Concentrate on the best 100, top 100 discoveries worldwide. Metal agnostic. We don't care if it's copper, nickel, uranium. It's about the value of the discovery. And we really tweaked our investment strategy, and we ignore the hopefuls. So don't call us for money if you say, I will have the next discovery. We're not interested. Call us after the discovery hole. We expanded our team quite a bit. Our AUM is over 100 million now. So we have Martin Katzberg. He's working from the state of Washington, following the markets. We have Samson Lee. He is working from Hong Kong. Both have been private investors in this space for a long time, and they really have a good track record. What's our process? We follow discovery news, exploration news, drill results 24/7 with this team. We try to read everything. We pay for newsletters, specialized newsletters. You only need one good tip from one newsletter writer. We also look for good insider trading. A lot of this information is available online. You can see insiders buying and selling. They have to report it. And look what happened to us last year. Patriot Battery Metals responsible for a lithium discovery in Canada. Samson Lee gave the first tip in the end, late November 21. And we bought shares for 30 cents. Then he sent another report in March 2022, and we added to our position, and now the stock is running at $14. So this was his report in March 2022. He said the undervaluation is incredible, 9.5 for undervaluation. Maybe this is hard to read, but this is November 30, 21. He alerted us on these great results. So if our system works well, we are notified of a new discovery within 24 hours. There's another mail sent by Samsung to us. And because he's based in Hong Kong, he's sending us these alerts during the night. So when we wake up, we're always aware of the latest news from Australia. We've had many takeovers in our portfolio since the start in 2008, because we have a great exit strategy. You can just wait for the buyout, for the takeover. If a small company makes a significant discovery, we always see a buyout, because a major company would like to buy these reserves. So the full list is on our website. And we also completed this map recently. This is all the projects which have been taken over, all the 76. You can point on all the dots and find more detailed information. The takeovers of last year, 7. It shows there's a lot of M&A activity. The world's in need of more natural resources. So we expect the M&A activity to increase, especially now we have the divide between the East and the West, between the West and the BRICS countries. The Western countries, US and its allies, have really woken up that they can't rely on China. They don't want to be dependent on China, so they want to develop their own mines and their own industry. Well, you have luck. And you have timing. I pointed to this before. I started the commodity fund at the top of the last commodity cycle. This is the CRB commodity index, and this index is down quite a bit. So this explains why the last 5 to 10 years have been quite hard as an investor. If we look at our main benchmark, that's the Toronto Stock Exchange Venture Index, since the start of our fund, it declined 91% when we reached the bottom during the Corona crash in March 2022. We've seen some recovery of the market, but since our start, we are down 19%. But our benchmark, the TSXV, is still down 78%. And the HUY, another important benchmark for gold producers, is down 50%. So this shows how strong the declines and the correction have been in the commodity markets. But when in doubt, I always say zoom out. Even in this very strong downtrend, in this very strong down market, bear market in commodities, we had 4 spectacular years with gross returns over 70%. So we are down less in bear markets and we go up more in bull markets. If we look at the rallies in these recovery years, in 2009 we had 6 double-digit months within 12 months. 3 of those months delivered gains of, well, let's go back. 3 of those months delivered monthly gains of over 15%. During the first recovery, the commodity markets bottomed out January 2016. We had 5 double-digit recovery months. 2 of them showed returns over 25%. And after the crash, March 2022, we had 5 double-digit months of recovery back to back. So we do think that the market has bottomed out again. Gold price is rising, silver is breaking out, so we expect a strong year this year as well. If we look at the valuation, this is the commodity, the ratio, it's the valuation of commodities in relation to the Dow Jones. And we go all the way back to 1900, and you can see everything is a cycle, especially in financial markets. We started our commodity fund at the top of the last cycle, when the valuations of commodities was quite high. So this has been the decline ever since. As said, there was a major bottom March 2020. Markets recovered a bit. But if we look at the current, this is another, show of the valuation of the metals and mining index. It's the price-earnings ratio. If the price-earnings ratio is sub 10, commodities are real cheap. And currently, producing companies, cash flow positive resource companies are trading around 6-7, P of 6-7. It's the same like we've seen after the Lehman crash at the end of 2008. In this run, our fund went up 4x. So we see the same bottoming pattern here like we've seen 14 years ago. The world's in need of more discoveries. We're running out on many commodities. We see many stressed markets where we have production deficit, which means that total demand, total physical demand for metal is larger than total world production. And this quote by the CEO of Gold Fields explains it. The world needs 85 million ounces of gold every year. We discover not even half. So when you make a discovery, when you make a significant discovery, they will always be needed, they will always be bought out. And that's why we invented the Discovery Award. This is the fourth year that we'll present the Discovery Award. We had some great winners, Adriatic Metals, Greatland Gold, responsible for a large gold discovery in Australia. If you want to have a tip, buy Greatland Gold now. Their stock price is very depressed. And it's a very interesting situation. Last year, we had Philo Mining, responsible for a great copper gold discovery in the Andes. And this afternoon, we'll present a new winner. Why do we believe in discovery investing? Well, discoveries create value. The average company listed on the Canadian or Australian Stock Exchange pre-discovery has a value of around 5 to 10 million. When they make the first discovery, this value jumps to 20, 30, 40, up to 100 million. When it turns out it's a significant discovery, you see a rapid increase of the value of the company up to $500 million. And that's where we focus on the tier 1 and tier 2 discoveries. A tier 1 discovery like, the gray mining or some other examples, they quickly grow towards a valuation of 2, 3, 4 billion. NextGen Energy is a great example as well after their uranium discovery. And we focus on the tier 1 and tier 2 discoveries only. Our investments are worldwide. Main investments are in Canadian listed companies and Canadian projects. 30% of our investments is in Australia. We have some investments in Western Africa, Southern Africa, quite a bit of investments in Latin America. And as said, our strategy is metal agnostic and is also almost country agnostic. So we follow the largest discoveries. We don't care where it is. We've seen a very strong growth of our fund. This is the number of investments into our fund. And we've really seen, we had net inflow every year since our start, and we've seen a very strong uptrend since the Corona crash and the start of the inflation, the era of inflation. If you look at the assets under management, this was after the Lehman crash. We had a quick rise because the markets recovered. And then we had this long bear market. So we had net inflow of money, even in the bear market. but because the valuations and the stock price declined quite a bit, our AUM went down. I bought out my founding shareholders around this moment, and then we had a very strong rise. And now we reached 160 million euro in Q2 last year. We're down a bit, but we're comfortable over 100 million now. Our portfolio, if you look at the metals, we love gold because it's a hedge on all the problems in our fiat system, where we have continuous debasement of currencies. So 53% of our investments is not in physical gold, but in projects and companies who are gold related. 12% in copper, 11% in silver. Well, as said, we follow the discoveries. And of course, zinc is with a Z and not with an S. We need to do some editing. If we look at geography, 34% of our investments in North America, 25% in South America. And since 2017, 2018, we started to study Australia real well. First 10 years we ignored Australia, but the best discoveries are being made in Australia. Australia is very underexplored, and that's where we have some of our greatest successes. This is a bit technical chart. It shows the relation of commodities against the tech stocks. This is 92, this is 2000, 2008. So sometimes commodities are strong and tech is weak. Sometimes commodities are weak and tech is strong. And here you see the cycle as well. So we had a very strong bull market in commodities after 2000, when China entered the World Trade Organization. We had this huge bull run. We started our fund, as explained, in 2008, at the end of that bull run. The gains made in this period were incredible. And then we had to watch the bear market develop. And now in March 2022, after the Corona crash, I think this was a major bottom for commodities. And now we have this era of inflation. We have the tension between the West and the BRICS. You could even call it an economic world war developing, and I think will benefit greatly in the next few years. As said, we've had a few nice years. 2020 was one of it. We ended in the Bloomberg list out of 10,000 funds at the 9th place. Of course, we've seen many frustrated investors. We've been frustrated ourselves because of the long bear market. But the great thing is when you're a discovery investor, you're happy when prices go up. And when prices go down, you can buy a bit more. Thank you.